Straza, how many croquetas so far this morning?
I've had none.
Oh, do you have like Cuban bakeries that you could walk to now? You don't have that anymore.
Nope. It's a whole different vibe in terms of the food down here. You could find them, but they're not everywhere.
There's
Which
probably
I'm
better
bummed.
Italian, right? Better Italian.
Better Italian. Still haven't found decent pizza though. You know.
I could
So
see that. Like decent Italian because you got like Northeastern people who moved down there over the years. Chicago too, for that matter, right?
so I have an idea. I've always been like a never restaurant person. They're just not good businesses, and it's miserable for the owners. However, if I had to do it, I would get two storefronts in a strip mall right next to each other, run them both. I'd find a good Jew and a good Italian. We'd have bagels in one shop, and we'd have pizza in another, and we'd import the water from New York. Game over. The line out the door for both of those places all day here.
Yeah, and the bread is going to be, same water, the whole thing. So there's a lot of similarities. So I see what you're doing
Yeah,
there. You're double dipping. Not bad. Not
right.
bad. Still shitty margins, restaurants.
I know.
What's the worst business? The ETF business or the restaurant business?
Probably restaurants, man, because you're dealing with
And those
people in a
margins
weird
on the
way.
ETF business are terrible.
Well, restaurants are tough, man. You,
I
you
know.
know, you ever work at one? You ever like wait tables?
I did not wait tables, but I did work at Arbetters on
Yeah.
87th and Bird Road. Shout out to Arbetters. These were Boston folks that in the late 50s moved to Miami and opened up a hot dog joint, right? And what ended up being like a hardcore Cuban neighborhood eventually, not then, but it became
Yeah.
that. And then you got you got these gringos making chili dogs on the corner. It's fantastic. And then I worked. So my dad was like, listen, you're not going to sit around all summer and do nothing. So you're either going to get a job or you're going to work for me. And I had worked for him before, and he's fine. Like I didn't have any problems. It was just so boring for me having to work at my dad's office, like a law firm. Like, oh, it was the worst. Like the
Right.
people were fine, and my dad was cool, but like the day to day was terrible. So I was like, anything but that. So I'm on a date at Arbetters with a girl, and I'm telling her, I was like, oh, my dad's gonna make me work for him. I can't get a job. She's like, well, why don't you work here? Because I was there all the time, and I knew some of the guys. They're like, no. So I walk up to the counter. I was like, hey, are you hiring? And they're like, yeah. I'm like, okay. Well, they're like, when can you start? I'm like, right away. So I go home. I'm like, Mom, Dad, I got a job. And they're like, where? I'm like, Arbetters. And they both put their heads down and just started shaking their heads. They're like, are you serious? I'm like,
Is
yeah.
that
Like,
like
all
the
right.
best? Is that the best grease shop in all of Miami? Like still today? Like that's where you go. That's the Merritt Canteen of Miami, right? Best dogs? No, you don't
Oh,
know.
best
You're not a
dogs
Miami
in
guy
Miami?
anymore.
Yeah. I mean, not that there's that much competition. Like, Cubans don't eat hot dogs, bro. Like, Cubans eat hot dogs because the
They should.
Americans eat hot dogs.
Well, they should eat hot dogs. A good hot dog is very underrated. It's a comfort food for a lot of people. They're really delicious. I do the chili cheese. I've been doing my own
No,
chili
just
cheese.
Cubans didn't have that. The Cubans don't even have a name for hot dogs. You know what Cubans call hot dog? Hot dog. Vamos a comer hot dog. Like, they just call it with a Spanish accent, the same thing as the gringos. Anyway, let's go. We got
Oh,
markets to talk about.
the
Things are
dogs.
moving. Shall we, Izzy?
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
All right, ladies and gentlemen, happy Friday. Today is Crypto Friday, where we like to talk about crypto. Not that we don't on the other days, but today we like to pay a little extra close attention. Crypto Fridays, first week of the fall, kind of behind us. But the reality of the matter is the first week is until next week, right? This one's kind of one of those weird in-between purgatory where we're still kind of in the summer, but not really. Kids are going back to school. Everyone's coming back from the Hamptons. It's kind of a shit show, just trying to catch up. Next week's the big week. So we got a lot to talk about today to get us ready for that. I am JC Parets. We got Steve Strazza. Spencer Israel still down at the beach with his family. God bless. Good for him. This is the time to go. All the kids are back at school. He goes to the beach. That's the move. Spencer Israel, somebody's doing something right. We got a great show for you today. Hit it, Izzy. Let's go.
So what'd
All
you think of the
right,
game
we are
last night?
back. Brian Harris is right. Perro caliente is what the Cubans call it, which is just which is silly. It's just perro caliente would be literally a hot dog, right?
Did you watch the game last night?
I did not watch the game last night because there aren't two teams in this world that I could care less about. I'm
I
not
care
rooting
about
for
both of
either one
them.
of those teams. I'm not rooting against either one of those teams. So I just didn't have a horse in the race. Went to bed early, actually. I was in bed by like almost 8 o'clock, like 8 o'clock.
I'm rooting heavily against both of them for the rest of my life. I have very much have
What
a
do you
horse in this
root?
race.
Do you root
And
for a tie? Like, what do you do there?
no, Cowboys, dude. There's no one like Philadelphia. I'll root
So you'd
hard for
rather
the
the
Cowboys.
Cowboys win than Philly win.
Cowboys never hurt me. They've never really been good in my life, if you think about it. It's
Well, they were
sad to
good when
say
you were
that.
little in the early 90s.
Late 90s, but like Troy Aikman, Emmitt Smith, they didn't really hurt us. We were better than them back then. Eagles, on the other hand, have just destroyed my childhood in so many ways. And I think they kicked off the NFL season last night in the most Philadelphia fashion ever. They couldn't
Spitting on
have
the quarterbacks.
Yeah, I mean, just the most Philadelphia people doing Philadelphia things. Before literally the game really even starts, he's spitting on the quarterback of the other team and getting ejected. Rose turns to me halfway through the game. Why are they fighting so much? He said, the game's in Philadelphia, honey. She doesn't know what that means. I don't know what to tell her. Why is this guy getting a penalty? It's because he tried to literally murder that man and take his head off.
Yeah.
Dirty people doing dirty things. Shout out Philadelphia. It's not for me, but some people like it. Tragedy.
I like Philadelphia.
People don't know how to act.
I'm not a Giants fan. Like I like Philadelphia for what it is. Good eats. When the Heat are in town or the Dolphins are in town, I get to go to the game. It's great. It's only an hour away. I saw Elton John there. That was cool.
I was thinking last night, isn't it strange? Hold on. Isn't it strange that Philadelphia is a part of Pennsylvania? I feel like Pennsylvania is a nice state and Philadelphia should really belongs in like Jersey.
I hate to break it to you. You could say the exact same thing about New York City, my friend. New York City and the rest of the state of New York is night and day. Miami and the rest of the state of Florida is night and day. So, it's kind of like par for the course.
Bitmine immersion technologies issues clarification on listing status. Confirmed July 8th, 2025, NYSE American listing fully compliant with exchange standards plus existing shelf registration and at the money program remain valid without shareholder approval. Completed PIPE transactions ensure continued capital market access. Clarifies NASDAQ's 20% shareholder approval rule does not apply to BMNR. There's a situation here between the crypto treasury companies and the exchanges, and it's going to be between the regulators soon. So I'm monitoring this very closely. Things are moving fast. This is now the statement issued by BMNR. I think you have to approach this whole place, especially these brand new treasury companies, with extreme caution right now. Capiche?
I want to give some color to the folks out there. For those who don't know, Steve Strazza in a prior life used to audit these types of companies. This was literally his job at a Big Four doing this thing. So when specifically what he's talking about, he's seeing through the lens of somebody who's auditing these companies and talking to the regulators and being that intermediary. So, when Strazza says, be careful, I'm going to listen personally. You do what you got to do, but that his opinion on food, I don't respect it that much. But his opinion on something like this, I could tell you for a fact, I trust him way more than me.
The exchanges are, they're going to lock down on these companies, and I think it's the right thing to do because there's been an absolute explosion. They're just going to make sure that they're regulating them properly, and frankly, that because these guys are operating in a quasi world where they're using traditional capital markets because they want the money, but they're dabbling in non-traditional digital markets, crypto markets, right? And we have different rules for both of these things. So the exchanges are trying to figure out, okay, if you want to be a part of that world, but come to our world for access to capital, you kind of have to follow similar rules, right? This can't be some sort of black box. And that's what's happening. And I think it's a good thing for the long run. It's going to help us separate the good from the bad here.
All right. It's Crypto Friday. This is something I think that we need to make sure that we discuss. I mean, all eyes there. I don't know any of these things, so I don't really have a horse in the race, but I'm just going to stay away from them, watch and see, kind of see what happens. Maybe something changes, maybe it doesn't. But, at this point, I'm out of it. I got something important for those of us who, this is like what Strazza's talking about. While it gets think about it like this, Strazza. Market noise is not equally weighted with the market importance, right? So something like this, it's getting talked about a lot these days. But at the end of the day, it doesn't matter at all to the global macro landscape at all.
No, these companies are meaningless.
So noise and importance are not equally, like there's no symmetry. There's a lot of noise coming from this area that doesn't matter. Some people might be trading these things. I personally just am not. Not because of what Strazza says, just because I haven't really seen any opportunities there, so I've just been out of it. And now Strazza's telling me to be careful. I'm like, great. Even one less thing to worry about. But the truth of the matter is there's this whole massive market out there that really matters, that doesn't give a damn about what's happening in this tiny little niche corner of the market that is these treasury companies. And just yesterday, go to slide 2. This is the exchange traded vehicle for a Dow Jones Industrial Average. This is the ETF that tracks the world's most important stock market index. And what do you know, Mr. Strazza? Yesterday, it happened to close at the highest level of all time. The Dow Jones Industrial Average ETF, the diamonds.
Yeah.
I don't know what happened to that. Nobody calls them diamonds anymore. They used to be called diamonds.
I do.
Highest close ever. How do you feel about that, sir?
I love it. I think we're seeing some really, really constructive and healthy rotation here. S&P 500 also closed marginally at new record highs yesterday. So a lot of good stuff. And I like kind of the shift in leadership groups here. I think it's time for some new leaders. I think that's healthy. I think it's great. Where you been, small caps? Welcome to the party. What's up, China? Hey, transports. Like there's a lot of stuff out here. We got a lot of options as investors. And I think that we have more and more ponds to fish in today than any other time in this bull cycle. I love to see the Dow Jones at new highs.
Let me ask you this. Somebody who literally I talk to every single day for, I don't know, a decade now, probably. What do you think I think is the most important part about this chart?
The flag on top of the resistance zone. We're flagging on top of support or on top of polarity.
So what does that mean? Tell the folks.
It means that buyers already won that battle.
But
what? You have a clear place to define your risk. You need a little resolution from this short-term pattern, but you pretty much have the breakout in the books of this larger pattern. No?
You're spot on, right? Which is why I wanted to test you. For me, everything you're saying is right, but the most important part of all of that is that if it does break below this little flag and we are back below last year's highs, there's your bear case, right?
Yeah.
Or at least there's the start of one.
Yep. And perfectly actionable here, right? Because look at how tight that risk is. You could take a shot here, stop yourself out with a really tight loss in the event you're wrong.
Yeah. Very, very clean, well-defined risk here. If this fails, there's your bear case. You're bearish. You think, people were saying, oh, signs of a top everywhere. Can you go to the next slide, speaking signs of a top everywhere?
Weren't you the one who just told me a few weeks ago nobody trades this?
It's the Dow Jones Industrial Average, sir. It's the ETF that corresponds with the world's most important index. Go to the
Okay. How about expressing
Go to the next slide. Hold on. Go to the next slide.
Sorry.
So when I hear signs of a top everywhere, and I look at this chart, are these tops, Strazza? Are these tops?
No. I love that volatility before the breakout in the ACWX too. Really nice.
So you got the all-country world index breaking out to all-time highs, ex-US. So this is the rest of the world outside the United States. So when these assholes are telling you it's only 7 stocks, they're lying to you, and you need to be a moron to think that they're correct. Like, if you believe that it's only 7 stocks, you're an idiot. Like, I'm not a poker player, but like, in poker when they're like, oh, if you don't know who the sucker is, the sucker's you. The suckers are the people who think it's only 7 stocks. Don't be that sucker. It's a hell of a lot more than that.
Yeah.
And when I look at the Russell 2000, hasn't done anything in 4 years. Dow Jones Transportation Average hasn't done anything in 4 years. I don't know. Doesn't look like a top to me, Strazza. Am I crazy?
No. Wavy's really been stuck on this RSI thing, though. Do you have any comments?
Let me tell you something, Wavy.
Momentum divergences? I mean, this is just
potential Potential bearish momentum divergences are a characteristic of healthy uptrends. Go back and look at all of the greatest uptrends you've ever looked at ever, right? Like, go back, pick one, pick all of them. Doesn't matter. Go back. You know what you're going to find? Quite often, you're going to find a series of higher highs in price and lower highs in momentum that ultimately resolves in higher momentum, right?
JC,
That you see all the time.
do you think anybody out there is actually looking at RSI 14s on their charts more than all of us? I mean, we probably use this indicator as much as anyone. I probably use
as
it
a team. I'll tell you this: as
Yeah.
a team, between everybody, like, between people that we work with, people that we like are close friends that technically we don't work together, but like we kind of do because we work with each other. You know what I mean? Like,
Yeah.
collectively, there's no group on the planet that looks at a 14 period RSI as much as we do.
Shout out to the J. Wells Wilder.
Yeah, shout out. Okay, ready? Two more things, and then I know we got Louis coming in the house. Look at the New York Stock Exchange Composite. There's slide 5. Look at the New York Stock Exchange Composite. These are the stocks that trade on the world's most important exchange. Highest levels ever. Throw that up there. Highest levels ever for the New York Stock Exchange Composite. Strazza, is this, what do you call them, an exotic index? Is this an exotic index or is this legit? Does this play?
It's fine.
It's fine.
Look,
The
I like
stocks that trade on the most
exotic,
important exchange. So you're going to get a lot of cyclical exposure here. You're going to get a lot of international exposure. Like 40% of the biggest 100 components here are not even American. They're from around the world. So you're going to get a lot of the big banks and the big industrial companies from all over the globe. They're all going to trade on this exchange, and it's making new all-time highs. So then just yesterday, this came out. Throw up the question. So the folks over at AII ask a question to their members every single week, just a special question. And this one was, how has your sentiment toward the stock market changed since the start of the year? Okay. How has it changed since the start of the year? Let me tell you something, how it's changed. As it turns out, only 15% of the members said they've become more bullish this year. This is with new all-time highs in the S&P 500, NASDAQ down, New York Stock Exchange Composite, Europe, Japan, new all-time highs across the board, 10-year highs in Shanghai Composite. Only 15% of the members said that they've become more bullish this year as the year has progressed. Meanwhile, roughly two-thirds of all respondents said that they've actually grown more cautious or flat out bearish. Two-thirds, only 15% more bullish. Stock market's making new all-time highs every week, literally. How do you am I living in the twilight zone?
I can't. I talked about it yesterday. I saw the new data. I saw the new AAII data.
Go to the AAII data there, slide 8, and then we'll go to Louis.
I said,
am I living in the twilight zone, folks? Can I get a witness? 5 weeks in a row now, you got more bears than bulls on the AAII. Like, what planet are we living? Like, what is happening here? Am I crazy?
No, but it's getting more.
Has the whole world gone
more
crazy?
bearish, more bearish and less bullish. There is what these surveys are saying.
I don't understand. Are we looking at the same market?
Is this politics, you think? Some people are really, I think some people have absolutely lost their minds and they're never coming back.
Two-thirds of the respondents said they're either more cautious or outright bearish as the year has progressed, as the market has gotten stronger.
I'm getting to the point where I don't give a fuck what anybody thinks about any of this.
No, but I mean, listen, when you study bull markets in the past, and I always say that because I have studied the bull markets in the past, you see. I've lived through a bunch of them. I've studied all the ones before that. I can assure you that early in those bull markets, you get these massive sentiment unwinds. The greatest bull markets ever start from extremes in pessimism, which this spring most definitely fits that category. And so early on in those cycles, you have that disbelief, like, no. And the positioning has been way off. The asset managers, super underexposed to the S&P 500. Hedge funds, super underexposed to the S&P 500. They've been waiting for pullbacks. They haven't gotten them, Yeah.
I don't know, man. Things look pretty good out here from my seat.
Last one, slide 7. So this one, this to me, that Dow chart that I showed, that's a big one. I know it's a little cute. I'll take that. It's a little cute, but still, the risk reward was legit on that chart. Throw up the semis. This is not cute at all. This is 100% legit. I don't care who you are. If the bear case for markets begins with a breakdown in semis. Tell me I'm wrong.
If this goes, that's concerning for sure. This one can't go. Just like home builders had to dig in and recover. This has got to hang on. You don't want to see this at the top for sure. One of the most important charts. It's gonna hang on though. Dude, if I were a betting man, I think you could sell puts in something like this.
You sell puts?
I think you could. Market looks so good right now.
What are you selling? The 275s, SMH 275 puts?
To be clear, I'm not going to do it. I like to bet on things going up, not just not going down. But I think you totally could. I think this is a safe one.
So you're selling the Septembers or the Octobers?
Nvidia still trades like 20 times earnings.
Are you selling the Septembers or Octobers?
Give me more money. Sell the Octobers.
So you're selling the 275s?
Give me the monies. Yeah.
You're selling the October 275s?
Yeah.
Oh, because you're going to get more money on the Octobers.
I'm literally saying that I'm not going to do this.
No, I know. This is October 17th, so you got about 6 weeks. You're selling the 275 puts.
You know what I'm more interested in?
I'm getting about $5.
I'm more interested in the Micron calls we're about to sell a double in, or did we already sell a double?
You're getting $5. You're getting $5 for selling the 275 puts. And then let's say you buy the 300 calls. If you buy the 300 calls, that's going to cost you about $7. So $2 out of pocket to get long semis if you're selling those 275 puts and you're buying those 300 calls. There you go. All right. Shall we? Let's go. Bring on Louis.
Can I? All right. Fine.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Look, I was gonna say, JC, I mean, more people are getting bearish. Like, I literally live down under, so I don't know, like, whether these guys are looking at their charts wrong.
Explain to people down under what? What are you under exactly? For the folks who don't know.
I'm in New Zealand, so I literally am down under. So it's actually easy for me to look at my charts flipped around down under. I don't know even what these people are doing. Like I'm in crypto, so I see a lot of people really pessimistic just on my timeline anecdotally. Bitcoin's still holding the support. It's still holding this anchored VWAP off the lows. Ether's literally just tripled off its lows and it's moved sideways for like a few weeks. I mean, come on, just a little bit of perspective is in order here.
Louis.
So I'm hearing scary things. You want to talk about the micro strategy? Throw up the micro strategy priced in BTC there in slide 9. This is the big story. We talked about before how from a global macro standpoint, it doesn't really matter. There's more important things that we're focused on in this little pocket of the market. This, let's call it, $4 trillion market, $5 trillion if you want to add everything up together, if you want to be cute, but nevertheless, not that meaningful. Now, within this specific niche of the market, there's a lot of opportunities to make a lot of money, and we certainly have. This one's, I don't know, one of the most interesting things happening in markets as we speak.
Can someone drop the link to Louis' note? I thought that your write-up, whatever, that came out this morning. I read it in bed this morning. I thought it was just fantastic. Why don't you give us the lowdown?
Appreciate it. So what I talked about in that note was about the grift of a lot of these corporate treasuries. And I just posed the question on why on earth would anybody want to own any of these treasury companies? I'm talking about SBIT or Bitmine, even MicroStrategy, MetaPlanet, which is this Japanese hotel company that pivoted to these to this Bitcoin treasury strategy. Why on earth would you want to own these companies as opposed to the underlying assets? And I looked at MicroStrategy, and the reason MicroStrategy's premium has been going up this entire bull market is because it was really the first and the only game in town. And so if you were mandated
Access.
to only what's that, sorry?
It was all about access.
Yeah, exactly. So if you were mandated to own stocks, you could only really own Bitcoin through something like MicroStrategy. And then in addition to that, if you wanted the only leveraged play
Yeah.
on Bitcoin itself, you only really had MicroStrategy because there were no options contracts on the actual Bitcoin ETF vehicles. And so now that we've got the Bitcoin ETFs, we're getting more ETFs and all of these other altcoins, and then we're also getting options markets, liquid options markets, in these Bitcoin ETFs. Where is the comparative and advantage of owning MicroStrategy? And so that's why ever since options have been launched in
It-
IBIT, you're seeing that premium be priced out of MicroStrategy.
And
That's
Louis,
insane.
Well,
This chart is absolutely insane, Louis. You
it's
guys,
amazing.
are you guys seeing
hold on.
this? Like, Louis, say that again. This is like,
Hold on, but let's just follow this line of thinking. If that's why MicroStrategy topped and has been struggling since late last year, that moment in time where MicroStrategy was the only game in town and the best way to get leverage to Bitcoin, it's not only never coming back, but it's only moving rapidly in the opposite direction away from them. There will only be more and more advanced, more evolved ways to gain leverage and liquidity to these markets and never have to deal with this crazy vehicle again. That they're never going back to that moment. So where do we go from here?
Look, guys, if you overlay MicroStrategy priced in Bitcoin, which is what we're looking at in this black line here. So when this black line is moving higher, it means that MicroStrategy is outperforming Bitcoin itself. So it's obviously been moving lower since November 20th of last year. If you overlay this with the premium that MicroStrategy is trading at relative to its Bitcoin holdings, they are basically the same chart. So my claim here on out is I don't think MicroStrategy is ever going to meaningfully outperform Bitcoin again.
Yep, I'm with you. Michael Bergeron says, you aren't pricing in Tom Lee, Peter Thiel, and Kathy Wood. Oh, I am. I sure am. I'm aware of who's here.
I mean, pull up the chart. Pull up the chart of all the different corporate treasuries, just so we can get a little bit of perspective for what we're looking at. I mean, you
can
can
you
talk
explain
about
some of these different
Lee.
ones that might not be familiar with the Naka?
Which is the one that makes the Disney stuffed animals for the theme parks, but now is a treasury play? That one's
Man, I don't know. These things are just all over the grift.
S-Bet. Okay, sure.
I mean, look, so these don't even look anything like Bitcoin itself. And then MetaPlanet, the one on the bottom right, that one was trading at a 6x premium. So in other words, if you were
That's a great name. At
MetaPlanet,
least they picked a
yeah,
winning name.
yeah. I mean, there was a hotel company, right? And so you gotta that was a great name for a hotel company that managed to pivot into Bitcoin. Anyway, but it was trading 6x premium to their Bitcoin. So if Bitcoin was trading at 100,000, you were buying shares of this stock. You're essentially paying $600,000 per Bitcoin. It's just lunacy. And so now, we talked a lot about these short traders shorting MicroStrategy relative to Bitcoin, and it was crazy at the time because again, we didn't really know how far that exuberance could go. But now we're seeing that premium be priced out, and so now that trade is obviously working. I think continues to work because why? Again, I'm just going to ask the question: why on earth would you own any of these companies as opposed to just Bitcoin or Ethereum?
And and then just in the chat, just to be clear, from what I'm hearing, the company that sparked this interest from the exchanges and the regulators wasn't even MSTR. It was BMNR. That's what I'm hearing. So
Yeah, but isn't MicroStrategy making a big pitch to get added to the S&P 500 because they're like the most profitable or something crazy like that?
they're not going to get added. I think that they would literally have to change their rules to take them. I don't believe that their gains are considered operating profits.
Are we gonna look
And there
back
has
on
to be.
this and like be like, oh, remember when everybody was a Bitcoin treasury and like, we tried to make Stock Market
Yes.
TV a Bitcoin treasury, but like for Pepe coin, like, are we gonna look back on this moment in time like we do like when everybody had a SPAC in early 21? I made a couple of phone calls, full disclosure. I'm like, yo, everybody's got a SPAC. Should I have a SPAC? And two of my smart friends are like, nah, you don't want that. I was like, oh, okay, I guess not. And then I just went on with my life. But everybody had a SPAC. These days, is this one of those moments?
Yeah, not only is it one of those moments, but then looking ahead into the next bear market, I think the previous bear market concluded, or Bitcoin bottomed the same week that FTX blew up. I think you're going to see that same thing in MicroStrategy. I think
Hold on.
next.
Is there an ETF of treasury companies yet?
That's a great question. I'm not sure.
Dude.
And the Nasdaq and the
If
NYSE
anybody
will
out
do-
there listening, you need
Yeah.
to launch one of those, an ETF of all of these, so that we can short it, right? We'll provide liquidity for you, bro. Don't worry. Just put it out there. We'll short the crap out of it. So will all our friends.
Yeah.
I mean,
and
I might be a little bit late to these things. I mean, these things are down 90-70%, but the next bear market, they're going to zero.
These ETF guys are usually late to the game, so it wouldn't surprise me one bit if they're like, JC, one launch last week. I guarantee, I wouldn't surprise me one bit.
And then just to be clear, the Nasdaq and the NYSE are going to copy each other with these new rules. As somebody who used to have to study the new regulations that would come out from the exchanges, they're going to move together. That's why the stock's moving. I understand that it's listed on the NYSE and this is Nasdaq, but the company actually came out and addressed this in 2 press releases in the past 24 hours. So they're paying attention.
Can we talk about the volatility or lack thereof in the cryptos X the Big 10?
Before we do that, I do want to just talk about
really
Story Protocol. Story Protocol, the reason why I want to talk about Story Protocol is because, again, believe it or not, there's another company on the NASDAQ 100 that also has Story Protocol, this random cryptocurrency, a $330 million treasury. It's this random distilling company, this random beer company that's basically a microcap. It's tiny.
Do you call it a microcap?
It's a microbrewery.
Yeah, exactly.
Nice,
and
bro.
so,
I like
and so
that.
you've got this brewery company, this random brewery stock on the Nasdaq. It's got a $300 million Story Protocol treasury, and I put out a note earlier on this one. I think this one's a scam. I think this one's going to zero, but I think this one moves higher before it goes to zero. I think the way that these guys are pumping this particular token, it's really fascinating. And then you have a whole bunch of unlocks that come into play in December, January, and February. And the flows that you're seeing between this particular treasury company and this particular cryptocurrency, I feel like it's just relevant to this whole treasury conversation that we're having.
And then hold on, because you made another great point. Actually, we'll finish this. This is a great chart. Are you buying this, JC? Sorry.
It's a scam, but it's a nice chart.
I think you could trade it, right?
Yeah, exactly. And so
when I buy these things, I hope it is a scam.
That's right. That's right. That's the way to do it. Louis, you also made.
I don't know. I'm not smart enough. Like, this is above my pay grade. I couldn't tell you whether it's a scam or not. But if I had to choose, I would prefer it for sure. Those go higher, right?
Yeah,
I'm good.
So JC was saying earlier, right before you came on, Louis, that none of this matters, right? Talking about like the treasury companies. And I agreed. None of it really matters for traditional markets. But you even mentioned in your post, and I know we've discussed it. I read these Coinbase quarterly reports. This actually matters a lot for crypto, these treasury companies, because we have one systemically large institution that owns too much Bitcoin now, MicroStrategy, and that's a real risk. If anything were to come undone at MicroStrategy, it would certainly create some sort of a crash or collapse in
Bitcoin specifically,
100%. 100%.
Not anything that's important.
And now we have somebody who saw what MicroStrategy did with Bitcoin and said, I want to be the whale for Ethereum. And now they're building and planning to be systemically a systemic risk to the Ethereum market, right? We have a major player getting in there. So now we have 2 big whales that if this treasury strategy doesn't go well, they're going to tank the price of the 2 largest cryptocurrencies in the market. So that is important to crypto, right? If this goes wrong over time.
I think it's a really good point. And ultimately, I think we're going to see more companies beginning to adopt a responsible amount of Bitcoin on their balance sheet over time, but absolutely not in its current form right now. I think what we have right now is mass adoption, or we have a grift masquerading as mass adoption. I think ultimately a lot of these companies are just profiting off the back of a lot of the speculative hype. And ultimately, it's extractive rather than adding to the crypto ecosystem. And the only thing it's adding is systemic risk.
And negative noise around the industry probably too, you can also argue.
Yeah, exactly. Think about FTX, right? The damage that FTX did to the credibility of the cryptocurrency industry was tremendous. And so
yeah, but as soon as Fred Savage went to prison, you can that was the buying opportunity, right?
I mean, the buying opportunity was when the actual exchange blew up, and so I think again, the next bear market, we're going to see a lot of these treasury companies uh,
Yo,
beginning to blow up. I think and the last bear market, when the tide receded, you saw all the naked swimmers. You saw Luna, 3AC, obviously FTX when FTX blew up. I think these corporate treasuries are going to be next. You're going to see them all go to zero throughout the next bear market. I think the next bear market is going to conclude with MicroStrategy blowing up.
Can you throw up the rest of the crypto, please? Because the volatility there, or like I said, the lack thereof, it really stands out. Can you throw up slide 14 there?
I'm happy that you're rounding the conversation off with this because I sound like a negative Nancy over here talking about all these corporate treasuries. But in
Great show.
actuality, the setup in crypto is really bullish. And Steve made the point earlier this week that even in traditional markets, even in stocks, these things are set up really nicely. You see these big bases in China. You're seeing a lot of these breakouts to all-time highs, but more recently, we've just been trading in this sideways narrow range in a
This
lot of
is
areas.
tight, dude. Strazza,
It's
look how
really,
tight.
really tight. This is the tightest volatility we've seen in the average cryptocurrency
Mhm.
for going back to October of 2024.
And I'll tell you, and Louis, I know you already know, and you're there with me. I bought more calls yesterday. The single tightest vehicle that I can find on my squeeze indicator is Coinbase right now. This thing just looks freakishly good. I loved your note on
Are
that
you
as well.
sorting, Strazza? You're sorting by volatility contraction, right? The most contracted volatility. Are you sorting by that and
Yeah,
saying
and then the
Coinbase
rate,
at the top?
and then a short-term rate of change on it because I want to see it start moving higher.
I like how you do that on it.
I want
That's
to
all
see
he
it
did
start
there. Look at that
going.
guy.
Yeah.
I mean, Steve is just like me. We both like a tight, and particularly when it's trading against these new highs. I mean, it's just a setup that's just got to give.
And you think of it, even though we're not talking about short interest here, right, or supply and demand in that way, the essence of the action that comes from a volatility squeeze is actually the same. You need momentum to spark it. You need momentum to come out of that squeeze, right? So
Dude,
you
this
look
is
at the
6
squeeze.
weeks of just contraction,
Yeah,
like
yeah,
insane. And so just to be clear, this is total crypto market cap outside of the top 10 cryptos. So no
it's a great
Doge,
chart.
no
Great.
Bitcoin, no ETH, no Sol, no Binance, right? Those are the big ones. No Chainlink, right? So here, these are the rest of them. So you're looking at about 300 billion, which is less than nothing. I mean, just insane.
When
I love
volatility was this tight last time, the crypto market cap, excluding the top 10, tripled in the space of 4 months.
I love that I've somehow become like the guy who likes the tight patterns. Like now my buddies, guests of this show, Louis, Patrick, Brian will send me texts and be like, yo, look how tight this one is.
Toy like a tiger.
Okay, yeah. If I could tell you how many times I've got the toit like a tiger joke into my SMS, I mean, it's
Where
great.
did that actually originate from? Where is that?
Bring me all your coils. Toit like a toiga was Mike Myers in a movie called Goldmember. If you know, you know. Austin Powers, what a franchise that was back in the day.
They're
Great
great
flick.
movies.
Great
Yeah.
quotable movie. That's not
Oh.
mine, baby. That's not mine.
You know what? I gotta go back and watch. It's been too long. I gotta go back and see how it holds up. But
It's
yeah, that
it's
was
like my
great.
I
comfort
saw
movie.
that
I
movie
watch
on a
Austin
date.
Powers. It's just like
Oh,
this
and you
comfort
know what
movie.
else is from that movie that I do probably too much? I love gold. That
I
was
love
also gold.
we get that a lot. Like we get that a lot. Like whenever I put bullish gold charts, you get the guy. I love gold.
Yeah,
No, you don't get
Louis,
that one either, Louis. They don't have Austin Powers in New Zealand,
dumb
Trust me, mate.
American,
They've got Austin Powers. That's my comfort movie. Don't worry about that.
dude.
dumb
Fun
American
fact. You
comedy.
want to know a fun fact? My first date with my high school girlfriend was to go
Oh,
see Austin Powers.
why do you
International Man of
remember that?
Mystery. First
Yeah.
date, no big deal.
All
Got
right.
the job done.
Oh,
Don't tell your wife
mate.
that
No
story.
pun intended.
Okay.
Oh,
All right,
God.
Louis Sykes in the house. You are the man, Louis. I know it's late over there in New Zealand. Are you up for the day or are you shutting it down for the night?
A bong and a
I'm
blitz?
sh- is that another reference that I don't know?
Bong in a bush?
I these references just like fly over my head.
Yeah, us Americans and whatnot. What are you gonna do,
Um,
Louis? What day you getting to Toronto?
I am not sure yet. I should probably plan that, seeing as
Get
it's
there on Sunday so you can see how Americans eat too much and watch football.
I mean, see how Canadians. I mean, I'm interested. Compare the portion sizes in Canada to that of America. See whether there's a difference there.
And it's the same thing. It's like New York, but fewer Puerto Ricans. More Asians, and
Probably nicer people, just friendlier.
yeah, nicer people, but like you're still getting more of that New York attitude compared to the rest of Canada because it's more New York City. And I don't say things like that. Like it's like New York because I'm not one of those. Like I consider myself a New Yorker, and like I'm like I've been to all these countries around the world, and I'm like, hey, it's not New York. So for me to say Toronto is like New York is really a compliment to the city because it is kind of like New York.
I gotta say, I'm thrilled to go. I mean, the only thing I've really been seeing recently are just trees and sheep, so it'll be a nice change of scenery.
Oh, it's a real city. It's a real city,
Yeah.
Toronto. No joke.
Real city,
Big
real
shout out to
people.
Canadian. Louis Sykes, thank you so much, my friend. Have a good weekend. YOLO
These
responsibly.
guys.
Louis does YOLO over the weekend because, of course, crypto markets don't close. Money never sleeps in crypto.
Are you dabbling with the Robinhood? I know some folks who are trading off market hours via Robinhood.
No, I look at Robinhood. Sometimes I'm interested in like what the overnight trading looks like. You can see the individual stocks on Sunday night. So I want to see like the biggest movers.
Do you think it's healthy that we tend to take the weekends off from traditional markets, or are we going to have to change that before this is all said and done?
We already do, Strazza. How many years now have you and I been talking over the weekend about crypto trades we're putting on? Like it's not going to be any different.
Yeah, but I don't really have to like worry and watch my account. Like I like to have those 2 days. Can you imagine if you had like options moving? I hope that's never the case.
I love you, Strazza, but nobody gives a shit what you want. Like you, of all people, know that what's going to make these banks more money is what's going to happen. And correct me if I'm wrong, more trading hours equals more money for all of these banks and brokers. So you're telling me that's not what's going to happen?
Yeah, and banks aren't going to do like all smart contracts in Ethereum in the future. Who's saying this stuff? Nobody's saying that. That's crazy. I saw something.
Can we throw up slide 2, please? I can't believe
I don't want to talk about China. I got to talk about China before Larry comes on.
Hold on. Fine. Let's start here, though. Hold on. I can't believe we haven't even talked about this. State of the markets. Dow is up 30 points this morning, but throw up slide 2, guys. Come on. S&P 500 futures up 40 basis points. You got Broadcom up 15% this morning. NASDAQ up a full percent, over 200 points. Bonds are absolutely ripping this morning as interest rates are completely falling apart. Copper up 80 basis points. Gold up almost a full percent. Silver up 1%. Volatility back under 15. Rates getting smoked. Mr. Steve Strazza, 15%.
The hardest
Broadcom, excuse me.
I love it. And I'll just say, I'll tell a story. I took half a position off this, I guess, earlier this year. It is always the wrong move. The hardest thing about owning the Mag 7s is not selling them because they go up more than other things. You want to sell them. You want to take profits. It's never the right move to sell these Mag 7s. Broadcom is a Mag 7, by the way. And this chart's just been incredible. This has been as good as any of them. Better than NVIDIA. The stock's a lot more expensive than NVIDIA, though. Like if I had to buy one today or even yesterday, give me NVIDIA all day. But this is just great. I mean, the stock is just they can't stop it. It's Teflon. What a rally here.
Bitcoin also up 2,300 points at 113,000. You got ETH up 3.7%. You got Sol up another 3%. All of these things up across the board. Steve Strazza, interest rates getting slammed. Bonds are absolutely ripping. Yeah. Commercial hedgers have never been more net long treasury bonds. You think they're going to be right, Strazza? Rates lower?
I'm so long bonds. I love this. It's making me very happy. I'm long TLT calls. I got massive positions in like leveraged bond funds. I'm all in on this theme. We've talked about it all summer. The 3 Bs, interest rates. I've made it very clear where I think interest rates are going. And I think it's important to watch the bond market because based on what the bond market is doing, some stocks will be better and be more preferred vehicles, and other stocks will be worse off and be less preferred vehicles. So you always have to be mindful of, the way interest rates in the bond market are kind of playing into this broader puzzle that we build here.
All right, we got Larry Thompson in the house, but
Wait,
Strazza
hold
wants
on.
to talk about China.
Hold on.
This, to me, is the best China chart in the history of China charts. I would consider myself somebody who has earned the right to say something like that.
Thank you.
And I am
And-
here to tell you this is the best China chart in the world. Slide 18. Throw it up for the kids. There it is. Your Shanghai Composite Index. For those who are unaware, Steve, can you elaborate as to what's in this thing? Why is it the best chart ever?
No, I was feeling creative back when this bull market was beginning after the momentum thrust last year in China. And I was thinking to myself, one of the reasons why I like China so much, I'm a big Mag 7 fan, been there for a long time, been raving about these companies and how they broke the way that we think about fundamentals, rewriting the rules of how high you can grow and what your growth rate could be at, this massive size of these companies. And I thought to myself, well, there's only one other place in the world that has this similar dynamic. These absolute powerhouse dominant companies that have more money than God and can keep investing in all the newest, hottest trends until they hit. That's what the Mag 7s in the United States do. And China has a very, very similar situation with some really, really large mega cap growth companies. So we threw them all in an index. We put them in a basket. We equally weighted it. We said, this is the Mag 7 of China. We're going to call it the Shanghai Composite because what a fun name that is. And it's in a new uptrend. And I think you pick your spots selectively. You get in the BABA as it's reversing trend, printing a similar pattern to this. You can get in the Baidu, bet on that failed top. You could trade JD here. I think like Cray is probably the best trade on the sheets right now. PDD is looking better. Tencent has been there, leading, looking great. Build Your Dreams, been weak lately, but early leader, Xiaomi. So there's a lot of good stuff in here. I love China. And I'm doing a thought experiment for people today and a little note. So check your inboxes later. But I'm constantly having conversations, JC. Even, a member yesterday said, you're putting on a lot of China positions. On all the China trades, I do a half a position. I said, why? He said, well, it's China. I do a half. I do a full position on everything else, but China, I get a half. Why do we treat China so differently? I'm going to take the position that China, despite being communist, despite being all the way over on the other side of the world, despite their stocks being priced in different exchange currencies, they're not so different from us here. And I'm going to show you what I mean by that. First chart. Let's look at US online retail versus Chinese online retail. If I stripped the titles off of this chart, it would be really difficult for you to tell me which one is which. This is Alibaba and US online retail index. Same pattern to me. Next chart. US speculative tech versus Chinese tech. What do you think, JC?
I like big bottoms, and I cannot lie.
One of these indexes is full of just United States tech companies. The other one, just Chinese tech companies. But boy, oh boy, do they look similar. However, half the people I talk to treat China differently. Next chart. Chinese banks. Everybody loves European banks. Let's give Europe some love here, right? European financials.
Wuhan winners.
The best banks in the world right now out there in Europe, right? Well, oh my goodness. How similar does our China Big Bank Index look to the European financials? Maybe they're not so different, Chinese banks and European banks, right? But one of these groups you all love, and the other one is uninvestable. Next chart. How about American EVs versus Chinese EVs? I'll tell you, Chinese ones have been better. This is Tesla versus Build Your Dreams. It's the same chart. But no, never China. It's uninvestable. I can't buy these things. Get rid of that. Lose that. Whoever told you that lied. Forget about it. These are just more stocks.
It's funny you said that, somebody said that you own two. It's funny you said that you own too many China stocks, because I find myself in the same boat. I bought more China this week, actually. And I bought more China probably 3-4 weeks ago. Right? No. When did I get in the SE? Like a month ago? That was the last China stock I bought. And now in the, not that that's China specifically, but kind of. It's still the same vein. And then now the, in the JD. You like that one, huh?
JC, do you think of them as anything other than what they are? Do you when you do that, when you go and you buy more China, are you thinking about like how bad they are and communism and
No,
CEOs getting kidnapped?
in fact, I am grateful that
Yeah,
sort of thing scares
I
people.
know.
Like
The
that,
runway.
the fact that they're communists, the fact that they, historically just, make things up and all these things, like that's great. I'm all in favor of people being scared at that sort of thing because that adds fuel to the fire. Just like stock market keeps making new all-time highs every week, and you have 5 weeks in a row with more bears and bulls. You
So,
got 2/3 of respondents saying how they're now more bearish or
so
cautious than when they started the year. Like that makes me so happy to see so many people so wrong. I want to give a big shout out to legendary technical analyst Charlie Munger. Charlie Munger used to always say that if people weren't wrong so often, we wouldn't be so rich. And so
yes, and also if people weren't so closed-minded, we wouldn't be able to do so well in trades like this. So
shout out
shout
to
out,
humans. Shout
yeah.
out to human vulnerabilities.
So one more thought experiment to just take this full circle. Earlier on in my career, China was the place to be. It was the biggest growth story. Oh, the demographics there, it's amazing. They're just like the United States. They got the best tech companies. You had to own them. There was this huge rush. The H shares market blew up. We started listing all of these companies on our exchanges. We built ETFs around them. Wall Street is so in on this situation. 10 years later, they're uninvestable. You can't own them. Absolute garbage. They're going to delist them. What if 5 years from now, we go back to a place more similar to where we came from, where all of these never China people are like maybe China people or like yes China people? What do these charts look like then if all of these people change their minds because they have to, because the outperformance is just so egregious they have no choice?
The size of these bases in China, man, it just doesn't strike me as a short-term resolution. We saw those momentum thrusts last year. Those are indicative very consistently of early stage cycles. The only thing that we've seen is more evidence to reiterate that. One day we'll see things that are gonna suggest that maybe the path of least resistance is lower. But all we continue to see is more. And it's funny that you and I are both adding to Chinese positions. And the answer is no. I didn't think, oh my God, China. I'm thinking, hey, do I really need more China exposure? But I'd be thinking that way if it was more tech exposure or more base metal exposure. I don't treat it any differently. It's just, hey, do I really need more? Like I got a bunch, but
And let me we just got one in. Here's exactly what I'm talking about. This is what I mean by why are people treating China differently? The charts look great. We just talked about it. We just showed them all. Somebody mentions the military show in Beijing. First of all, who the fuck cares? We need to dig deeper underneath the chart shown. Do you say that about NVIDIA? Like you're basically saying you don't trust the technicals. We got to dig deeper and find out something bearish to say about this. This is how people think about China. Stop doing that to yourself.
It's easy to find something bearish about China, bro.
We
Like it
gotta
ain't
look
hard.
under the chart. The chart looks too good. We can't trust it. We don't say that about anything else.
Yeah.
But China, I don't know.
China. Listen, we got Larry Thompson in the house who likes the home builders, likes the bonds, calls are cheap, he says. Come on down. Come on down, Larry. Come on.
Superman, you're wrong.
That Larry Thompson bumper hits hard.
I like it. We got to get a swag surfing on there for the Chiefs. They play today, so pumped about it. But
you and Ian McMillan are the only people I know that like the Chiefs.
There's football on today?
Yeah. Sao Paulo, Brazil, baby.
Sick.
Is that where they're playing?
Cool. Yeah, they're playing in Brazil against the Chargers. So
is this the first time that there's an NFL game in Brazil?
I'm not sure.
I'm against that. Keep it in America. Nobody wants to watch football overseas.
I disagree. I like that they do that. It's good. It's good for the business. It's good for Earthlings.
Players hate it.
Dude, these Europeans
it's a lot on
NFL
players.
Games. They love it.
It's a lot on players.
Ridiculous.
It's a lot on players. They get paid a lot of money. Suck it up.
Yeah.
You're in better shape than anyone on the planet. Oh, you got to fly on a plane, go to Europe. I don't care.
For sure.
I don't feel bad at all.
I just want to I know Steve has to leave, but I think he also proved the point that you don't have to own China if the stocks look like American stocks.
Ah, good point. That's a great point, Larry.
It's the dumbest thing I ever heard, Larry.
Hey, this looks
There's-
just
but,
like
but
this
you
one.
can admit that you're going to get more beta in Asia.
Yeah, I'm just teasing him.
But that's a good point, though. It's a good point.
Speaking of teasing, Wavy keeps bringing up RSI. My first chart I brought was to teach him a little bit more about technicals, because just as there's bad fundamental analysis, there's people who do bad technical analysis. And the XSD chart here, semiconductors. I heard Wells Wilder mentioned earlier. Got the book right here. Great book. New Concepts in Technical Trading Systems. There's another man named Andrew Caldwell, rest in peace, Caldwell, rest in peace, who came up with RSI ranges and studying the range and the
Dude,
characteristics.
great shout out to Andrew Cardwell. I knew him well for many years. Good shout out, Larry. Nice nice shout out there.
Yeah, so he took that a step further and said, understand the characteristic, especially if we're in a trending market, understand the characteristic of RSI. So look at XSD, a little bit more equal weight semiconductor exposure. That RSI is in that bullish regime and continues to work. So don't get too caught up in a RSI divergence in an uptrend. It's just a sign that vehicle going fast is still going forward, right? So don't get confused with that. That's how people got confused with inflation and the rate of change. The price is still going up. And if you are confused about it, just add a price level, trend level to then get out if it does break down, but don't anticipate an RSI divergence. That's just wanted to give that note to Wavy. Andrew Caldwell, you can watch some of his videos. Rest in peace. I believe he passed away a year or two ago, but great work there. So
I used to run into him all the time. He was always like at conferences with his wife. His wife was always there with him. Yeah.
That's awesome. That's awesome. My wife's great. I'd bring her places too. She's great. But just wanted
My wife
to
used to
note
come
that.
with me to shit like that. And then we started having kids. She doesn't go anymore.
Yeah, I'm sure once I reach that phase, it'll totally change. So good stuff.
Larry, I know you brought some charts, but I kind of just want to hear your thoughts, kind of bigger picture. Summer, one of the best summers for stocks ever in stock market history. That stands out. Summer doldrums, not so much, doldrums for the Bears. I didn't know that you were such a big Swiftie fan. The chat's chiming in there. You're a big Taylor Swift fan?
Big Taylor Swift fan? I don't know where that came from, but I'm a Chiefs fan because played high school football with some of the players on the team. So that's
some of the players, not just one, but some of the players.
One, yeah. Don't need to go down that rabbit hole. Yeah, I think the summer, right? I think the piece of that I think I was not getting wrong, but that I see price playing out differently than I anticipated is I brought that breadth chart 24. And I think what that highlights is people are talking about rotation, which is true. We are seeing rotation. But I think to couple the rotation, we're seeing breadth expansion, right? I think a lot of times when I think of rotation, I think of one stock going up, another stock going down. But MAGs closed at all-time highs yesterday. The S&P 500 inked out an all-time high yesterday. Retail inked out an all-time high yesterday. So yeah, we're seeing rotation from a relative trend perspective, but underneath the surface, we're seeing breadth expansion. We're seeing more stocks go up than we've seen this entire cycle. And so that's where I think in bull markets, people are trying to anticipate seasonality and anticipate that rotation. I'm guilty of that, right? You're trying to see what's next. And Broadcom wakes up and goes up 15% today. So that rotation out of tech probably bit you in the ass. So that's just one of those things, like it's a bull market, own stocks. I think you guys keep it simple from that perspective, which I love. One of the reasons I love your work is like, hey, own stocks of bull markets. I think you can overthink sometimes trying to get out of things too early. I think Steve said it great. Like one of the worst things you can do is try to get out of these big behemoth tech companies because they just end up ripping again. And we're seeing that this morning, right? Broadcom's going to open up huge. Tesla looks great here, about to open up 2.5%, 3% higher. So it's just a hard game to kind of play that rotation when you have something like all-time highs in MAGs breaking out.
Yeah, you mentioned a good point about rotation. It's not so much, money coming out of something and into something else. It's more the rate of change of those sectors, right? So, while, you had a period of time where consumer discretionaries went up a little bit, nowhere near as much as the others, then they went up a lot and outperformed all the others. But even when they weren't outperforming, they were not going down either. So the sector rotation is really on a relative basis, particularly in healthy market environments. Larry making a great point here that, the market's never been stronger, at least not this year. You've got the most amount of stocks on the New York Stock Exchange that are above their 200-day moving average than at any other point this year. So that is literally the market telling you there are more stocks and uptrends than at any point this year. That historically is not evidence of a declining market. Typically you tend to see that breadth deteriorate prior to market peaks, and you're not seeing that at all. You're quite seeing the opposite. So the great point. On the seasonality front, I think what a lot of people fail to remember, Larry, is that August, as great as August was, and as terrible as people were suggesting August should have been, August has positive returns on average when starting above its 200-day moving average. And so it was positive in August as it started above its 200-day moving average. So that's not surprising. Also, September, people claim that it is very bearish. It's a bad month. Also, historically, has positive returns when it begins above its 200-day moving average, which this September qualifies as that. So, I think seasonality, people really need to put that into context, and I think they fail to do that. But the market's doing what it traditionally is meant to do. Now, I will say that generally speaking, just broadly speaking, over the last few months, markets tend to do poorly, particularly in post-election years, and they've done very well. So when markets ignore those seasonal trends, that stands out. So how do you think about all that stuff?
Yeah, you made a great point there about one above the 200-day, which I think is when, once again, people do technical analysis poorly. They watch a few YouTube videos and they mistake simplicity in the analysis, and the context and nuance is what, right, the team and we try to do here is add that context to the price action. And if you look at XOK, it traded sideways during a time when it trades down. That's bullish, right? It's consolidating, and you're giving the benefit of the doubt to the underlying trend, which was up. And that's essentially what you're saying with the seasonality is like, hey, seasonality doesn't outweigh the underlying strength of the trend. People tend to not understand that. And it's like, why aren't you bullish here when you see a tactical top? It's, well, because if you study Dow Jones, Dow theory, if you study this, I think I have the big yellow book. Yeah, the technical analysis of stock trends with Edwards and McGee. If you study this stuff, they tell you like, yeah, this stuff.
Funny, you have the yellow one. You have the one that was after the one I read.
Yeah. But they talk about it, right? You have the little waves and then you have the tsunami of the big trend. And we don't want to get caught up in those little waves, especially not in a bull market. You're not supposed to be looking at the little waves and getting overconsumed by them. Creates good content, creates good conversation, but it shouldn't be the focus of kind of the price action. So that's how I think through that seasonality. I've only done poorly anticipating it. It's never done me well anticipating it.
Yep, I'm not surprised at all. I think about it the exact same way. Yeah. All right, so you brought a couple of charts here with you. I'm curious to hear your thoughts on energy. Speaking of rotation or lack thereof, interest rates are falling. Bonds are ripping this morning, and so crude oil taking it on the chin. You're seeing the metals acting more like currencies, with the rest of the Forex market ripping with the falling dollar, but crude oil behaving with the dollar as it has been first few years.
Yeah, I would say I don't think anyone has done well the past 3 years. If you zoom out on this chart, trying to get long energy, unless you caught the bottom in April, which honestly it's underperformed a lot of other assets. So no one's really made a ton of money trying to get long energy. I think for me, it's like you said, you're seeing some rotation. And if I just think about my position and exposure, you're getting 2 to 3% exposure to energy when you buy the S&P 500. And so if I am underweight it already naturally, just adding a little bit more exposure there to me is not something that I'm mad about. I think you're seeing this peekaboo pattern, right? You're seeing that breakout, pull back to this all-time high AVWAP, 2024 AVWAP. And you're seeing within this this consolidation that looks like it might try to resolve higher. You have really well-defined risk. So that's kind of my point here is like you have pretty well-defined risk. RSI is staying above 50. I think you could see underneath the surface, some of these charts look pretty good. Like Oxy kind of had a pullback 2 days ago and is kind of sitting above that 200-day. So it's not that you are over positioned in this. And I think that's something people might confuse when you're looking at bottoming patterns, like home builders were bottoming. It's that you're paying attention and maybe nibbling, adding, 10%, 25% exposure. And then if you see that follow through, you're confirming it to get higher. But I'm underexposed to energy. So it's something I wanted to add exposure to if at a clean risk reward level. You can even just see here using that anchored VWAP, it tested it, and now it's kind of trying to turn it into support. If it gets back below there, you're probably still just chopping sideways for the time being. But that's kind of how I saw the energy picture overall. It's been a hard trade, but it's something I continue to look at.
Yeah, I'm more interested in the things that are working. You brought the genie, these types of names. I mean, I think of these as like consumer stocks. I think of these as technology stocks, communications, that whole area, however you want to define what they are. I like all those areas, right? So like, I'm good. You're getting a little bit of both. This is a gambling, right?
Yeah, so it has to do with sports, right? Sports, we'll just say sports data and gambling, right? So
I love it. I'm so bullish. People making poor decisions. I'm so bullish on that.
Exactly. And I think anytime there's data being used, it's then now, because it's related to sports, it's then going to flow into the gambling market. And so, right, that's a great story. But what we had here is we had this huge base breakout and we saw it get back above the IPO VWAP. I've kind of been long since I highlighted this actually in Thompson 2 cents, but I just continue to like this space as a whole, right? You can play it via some of the sports gamblers, but this one in particular just has done nice, especially on a relative basis. When the market was down earlier this week, this kept kind of holding sideways. So you're seeing that relative strength. And then you have sports season kicking back up. And I mean, we know the NFL is a monopoly. So if this company is getting in bed with the NFL, that tends to do pretty well for those type of companies. So I like Genius Sports. The other chart, to kind of piggyback what you're saying about the consumer in retail, is XRT. And I wrote a note about XRT yesterday, slide 25. And I think when I first got started in technical analysis, I was similar to Steve, where worked in auditing, where I think growing up, you just think people are intelligent. They went to a big name school. They have Ivy League behind their name. They have CFO, CEO, blah, 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 all these letters. And you think these people are intelligent. So then you trust their words. And I think when you go down the auditing path, you become a bullshit. Like you're like, hey, is this bullshit or not? And I think what technicals does is it allows you to trust the message of the market, which is never really bullshit. The market is the least amount of bullshit analysis we can get is from the market. And so you'll hear the stories of your Uncle Joe at Thanksgiving complaining about, the malls are dead now. The consumer's dead. Everything's so expensive, right? And you hear your cousin Jennifer talking about how there's a long line at the beach, and people try to use this anecdotal evidence. Why do we need to do that when we can look at 90 retail stocks on an equally weighted basis with XRT and see that it's at all-time highs? Why?
Is that how many it is? It's 90 on that index? That's
90.
More than I thought.
It's 90. And It doesn't rebalance weekly, so you're starting to see some skew and some become larger names.
That's a lot more than I would have guessed. I would have guessed half that maybe.
Yeah, so it has names like Kohl's, O'Reilly Auto Parts, Ulta Beauty, Walmart, Costco. It has all those names in there, and they're equally weighted. So when someone is telling you, man, the malls are dead, or man, you know what? You see this on Twitter all the time. Man, their lines at this place aren't there anymore. It's not like it used to be. Retail's at all-time highs. Like the consumer is doing just fine. And I think that highlights your point. Like you're seeing that with American Eagle doing well, but you saw Lulu do poorly. And people are overweighting that.
Throw up the new slide too. I just put it in on the deck, guys. This one's great. Also remember the retail section, you're going to get dispersion in returns, unlike any other sector other than biotech, maybe. Where you're going to get winners and losers. But Larry, to your point, you're talking about equally weight retailers. You could broaden that out to equally weighted consumer discretionary in general, which is going to include the homies and the autos and other things that are not just retail. And it's giving you the same story. So you're getting the same message from multiple sources here, as far as I'm concerned, right?
Exactly. And so why, like, everyone wants to be, I read the book, One Up on Wall Street by Peter Lynch, right? And I think
that was the first book about the market that I ever read. You know
was
that?
it? It's a good one. But I think
it was all right.
people take, it's like exercise programs, right? People take the really easy part and they think, oh, I just got to do that. And then I'll be like Peter Lynch. All I got to do is walk through the mall. And then they miss the really, really hard part, which is his study of fundamentals, his risk management process, his portfolio management process, which that was the secret. The secret sauce wasn't him walking through a damn mall, right? And so people do the same thing in the markets and with their workout program. They listen to some guy who's like, yeah, I take this supplement, and then I do cardio for an hour in the morning and lift at night. And what do? They try to take the supplement, and they're like, man, this isn't working. Same thing, right? People just want to walk through the mall and become a good investor. It doesn't work like that. We trust the message of the market. So I think that's exactly what we're highlighting today. That's what I'm going to talk about at 5 p.m. today, is just listen to the message of the market. That's what technical.
Larry, I got a couple of stories for you. I was talking about it in a blog post earlier this week, but I wanted to bring it up on the show, and Larry kind of alluded to trusting the message of the market. I got two stories for you. One of them is 800 guesses. This is inspired by Matt Simonaro, Chart Kid Matt over at the Compound and Friends, good friends of ours over at Ritholtz Wealth Management. He wrote a blog post that inspired this. This comes from the book Wisdom of Crowds by James Surowiecki. And then, so here's the first story. Ready? In 1906, a country fair in England, 800 people entered a contest to guess the weight of an ox. Out of those 800 people, not a single person guessed the weight correctly. But the average of all 800 guesses, 1,197 pounds. Just 1 pound off from the ox's actual weight of 1,198 pounds. So nobody got it right, the weight of the ox back in 1906, but collectively, when you put them all together, they were off by 1 pound, okay? There's another story called Find Scorpion. In May of 1968, a Navy submarine called Scorpion went missing. The only information the Navy had on its whereabouts came from the final radio signal transmitted from the submarine, and cartographers mapped a 20-mile circle in the middle of the North Atlantic as a starting point for their search. Submerged in thousands of feet of water, locating the vessel seemed like an impossible task. So instead of consulting search and rescue experts to find Scorpion, the Navy assembled a team with a wide range of knowledge and expertise to guess where the submarine could be. Yes, that's right. Literally just guess. Again, this is in 1968. Not a single person independently identified the actual location of the Scorpion, but when the average of the group's guesses were put together, the average was just 200 yards away from the actual wreckage, showing you the power of the wisdom of the crowds, giving us a better ability. When I look at the markets, I'm thinking the exact same thing. I want to give one more shout out to Chart Kid Matt. He says, every trade reflects an opinion. Every sale reflects risk tolerance. Every allocation reflects a time horizon. You aggregate millions of these diverse, independent opinions, and voila, a price is set. You don't have to like the price. You don't have to agree with the price, but you would be foolish not to respect the price. And he concludes, when the price of an asset doesn't make sense to me, I concede that the market knows something that I don't. Very well said.
Yeah, crushed it. That's the beauty of technicals right there. That's the beauty of it. We've seen, I mean, men as an individual are faulty, right? As a group, we can triumph over a lot of things. And I think price is a reflection of that, right? It's a reflection of all those men. It's great point there by Matt and yourself in that note.
You know, it's just really adding upon exactly what you were saying. You know, Larry is really just trusting the message of the market, because the collective wisdom of the crowd is pricing in these stocks at the prices that they are. And some people don't like that. They're very upset about it. 5 straight weeks of more bears than bulls. I don't know if you saw the latest from the AAII, but 2/3 of the members are today more bearish or more cautious than they were at the start of the year. 2/3, and only 15% are more bullish. So, like, to me, it's like, wow.
Yeah, I don't get it. There's so much. I mean, from a psychology standpoint of, I think why that is. I think a lot of people who are managing money probably had parents who grew up in the 70s who just like put it in their head that inflation can't be tampered, that the economy can't evolve. But I hate to be that guy, say this time is different. I don't think this time is different. I know a lot of this time is different, right? I know a lot of the way we are able to get data. I know that because a lot of people who are managing money have experienced it, they're going to already be over positioned for it, which if we know that's the case, right? They're already over positioned in small caps failing here. They're already over positioned in the bubble. So if they're already over positioned in that, there's only one way they can unwind. And we know if a lot of these people don't trust the technicals, which that's what AAII is telling us, is that they're going to be stubborn, is that they're going to hold on too long. And that's just going to be the bear market, right? That's that bear wall, right? The wall of worry that can then be climbed. So I think that just gives the market legs here. And that's why you're seeing September so well probably do what it's doing. You're seeing broadening in the market because these people are just, they're not looking at the message of the market.
Thank God. Thank God. I got a quick recess and then we'll hop for the day. What do you say, Larry?
Love it.
Do it. Hit it. All right. I want to give a shout out. Throw up slide 2. I want to give a shout out to American Eagle Outfitters. Just the whole team out there crushing it. You know, remember what a CEO's job is. Remember what a publicly traded stock is. They have one job: increase shareholder value. It's not to worry about sensitive people that get offended by dumb things. It's not about employees. It's not about, sending the right message. It's about making money for shareholders, period. That's their only job. And if they're doing something that is not that, they are failing their shareholders and they need to be fired, and then they can go work in a communist country. What we do here as publicly traded companies is make money for shareholders. That is all that the company is designed to do. And if it's not doing that, that's a big problem. So I want to give a shout out to American Eagle Outfitters. Imagine that. You get a beautiful woman to showcase your jeans and people buy them. Wow. What a concept. So I want to give a big shout out to America. We are back, baby. We can have beautiful women modeling jeans and people are making more money. Like, if that is not the American way, then I don't know what is. So big shout out to American Eagle Outfitters. Big shout out to all the beautiful women out there. I love you.
I love it.
Shout out to Jeff Mackey for the chart, by the way. Great chart, as always.
Jeff killed this. And he also crushed the Lulu. So I just want to say, I'm throwing out all of my Lululemon man pants. I'm not walking around in that loser brand. This stock's got to turn things around before I'm buying any more Lulu man pants.
I got some on man pants, by the way. I like them.
There's too many other good man pants. Like, I do the Dogs. I'm a big Bird Dogs guy, but there's better man pants than the Lulu man pants, and that was really their thing.
What kind of tight man pants are you wearing, Larry? Larry's one of those tight pants guys.
You do the Dogs?
I'm not a tight
breathing
pants
those
guy.
things, Larry.
You don't
I'm not
rock
a tight
joggers?
Pants guy. You just wish I was a tight pants guy.
In my head, I just want with that tight,
Honestly, I keep the costs low. I shop at Costco, brother.
Apparently a lot of people shop at Costco. I'm like a
70-year-old when it comes to most of my style. So that's not my ball game most of the time.
And we love that about you. I just want to say shout out to the 3Bs, because everybody talking about the action from bonds today, right? And interest rates finally collapsing a bit here. Guess what? If you're paying attention to the stock market, it's been screaming at us all summer that rates are going to drop and bonds are going to pop. And now you're finally seeing it. We do this thing in markets where something works for a long time and then we stop paying attention in the future. So there's this narrative that the bond market is never wrong. The bond market's great. It's right a lot, but nothing in this is never wrong. There's nothing that's perfect. The bond market is wrong sometime. It was wrong this time. Stocks got it right. Shout out equities.
Shout out that I think Mary brought it up earlier this week. Unity software, new highs today.
Unity.
Hey, let's give a shout out.
UNITY. That's a Unity. UNITY. Is that, you guys too young for that?
Too young.
Yep.
Shout out
What's
Queen
up?
Latifah. Queen Latifah fans out there.
I gotta recess slide 3 if someone wants to share it. I kept getting a ton of comments about it,
What is
but
that?
shout out to
Are those
Beats.
Fucking love
Beats.
beats.
Dude,
So good.
people who don't like beets haven't had them done the right way. So this is
This
one
is a
method.
superfood. This is a superfood.
I eat them every day. Eat them every day. This is one method, right? There's tons of methods.
Huh?
What you do, you chop them up. You put the pan, some coconut oil in the bottom of the pan, throw your beets in. I do it on the grill because I live in South Carolina and it's the summer. I don't want to have the oven on in the house in the summer. You guys are rookies if you're doing that. Put the pan on here, get the beets nice and crispy. Take them off the grill, right? After they're nice and crispy, little balsamic glaze, little fresh honey, beets. Eat more beets. They're amazing for you. They're the natural Hims. They're the natural Viagra for those older folks in the trap. So
really,
yeah, they bone you up if you eat a lot of
JC got excited.
Really? No, I didn't know that. Like I'm eating oysters like on the reg. I'm like, oh, ready to go. I didn't know.
Oh, his head perk up. I'll send you the recipe.
No, I love this, Larry. I'm a huge beet fan. I'll tell you real quick how I do it. I throw them in a little like oven situation. Put the goat cheese, a whole thing of goat cheese right in there with it. Just bake the beets, right? A little scallion, a little crushed pistachio, and the balsamic glaze. You're absolutely right. You want the drizzle, not balsamic vinegar, but the balsamic glaze.
Yeah, it's already been, what is that? Condensed. I forget the
term. You do
beets
right. It's got that umami to it. It's like eating a steak. It's just fantastic,
beautiful
they have that
flavor. Nice natural sweetness that you can pick up. And actually, I should have brought the other photo, but the other dish we make includes the goat cheese. But you got to eat more beets. They're amazing. So, shout out to beets.
Beets are great. Beets are great.
So good. And then I also just want to say, I won all my bets, revenge betting against the Eagles last night. Just be clear, okay? Because I was slamming that line. I was slamming that live line. I had 7 points. I had 7.5 points. I had 5.5 points. So, fuck the Eagles.
Facts. Go Chiefs.
And nobody wants to watch this Saquon documentary either. Okay, you're still playing football. How about we do a documentary about your life once you retire, dude?
I want to give a shout out to Saquon. He's got some business moves he's making. Like he's not just a dumb football player. Like he's making moves. I see you, dog. I see you.
Mm-hmm.
I'm not a Giants fan, so I don't give a shit. I'm rooting for the guy because he seems like a good egg.
I mean, you're a Dolphins fan, so you got to root for another team, right?
Oh wow, wow. Miami Hurricanes top 5 team, by the way, for the record. So I'm doing just fine. Thank you very much. Guys, this has been a great show. I want to give a big shout out to Larry Thompson. I want to give a shout out to Steve Strazza. We got Slick Rick behind the scenes, Chart Master Flex on the day. We got Izzy on the 1s and 2s. I want to give a shout out to Sydney Sweeney. God bless. You're doing the world a good justice, right? People are making money. People are happy. Beautiful women are back again. I'm into it, guys. I'm into it. This is definitely
get your beats in.
Stuff.
Have a great weekend, everybody.
Enjoy the NFL and enjoy the NFL Sunday. First NFL Sunday for the year. I'm like, I tell my wife, I was like, what are we doing Sunday? She's like, nothing. I was like, oh, so we're just gonna hang out and watch football? She's like, that's what you want to do.
That's what I'm doing. Big football party.
All right, guys.
Listen,
have a good weekend.
May all your call options expire in the money, like mine.
Hey, cheers.
I can't take no loss.